Okay, welcome back after that little phone call. Where were we? Oh, yes. I was talking about retained earnings. I'm just going to put that on autofocus so it's a little bit clearer. Okay, so retained earnings is always made up of net income and dividends. Sometimes they don't tell you the dividends down here, and so you'd have to fill the blank here to figure out the. So watch for that. If it does tell you dividends, they're likely keeping it from you and you have to figure it out. So dividends will go in financing, and we're good there. Now, we said statement of income is all going to be in operating activities, generally. Okay, now let's read the extra information at the bottom. Additional information. The company obtained a mortgage of $155 from a bank to finance the acquisition of the land and building. So, does that mean it's a non-cash transaction, or is there a third party involved? Well, because there's a third party, this goes on statement of cash flow because third party. So the mortgage does get recorded up here. It's okay. Now, notice there was a mortgage of $155, but it was $152,400. So there must have been a payment on mortgage, which is going to be the difference between $155,000 and $152,400. And it's all going to be in financing. Now, for the purpose of this example, they could be reporting under either ASPE or IFRS. If it's a publicly accountable enterprise, the management has chosen to present interest paid in operating and dividends in financing. So that's the most common, but check each question. Now, one more thing I want to do before we actually go to preparing the cash flow statement. On page 2 and 3 of your note, you have your formulas. So your formulas for operating activities, page 2 and 3. There were 6 categories. What I want to do is look at all the operating ones that we identified as operating and say which category they go in so that we'll have a little bit of it organized before we go to do it. So, let's start with the income statement. So, all of it's in operating. So sales revenue. Which section does sales revenue go in? Well, it's under cash receipts from customers. So it's section 1. Where does cost of goods sold go? Well, that's cash payments to suppliers. So that's in section 3. Subtotals are never in there. How about salary and wages? Well, that's cash payments to and on behalf of employees, so that's section 4. Interest expense is cash payments from interest and dividends that belong in operating, and down here, interest is operating, so it would go in section, I wish I would have drawn little lines, section 5. Now, what about depreciation expense? Is that cash? No. So non-cash, ignore. So if it would have been included in other operating expenses, like let's say these two had combined, you would have had to subtract it from the total. But because it's separate, we just ignore it. Okay, how about other operating expenses? Where do those go? Well, are they related to employees? Is it from interest and dividends? Is it from income tax? No. So likely it just has to go in section 3. So then we have income tax expense. That's the very last category. 6. Oh, sorry about that, you guys. It was crooked. So hopefully those made sense. I was just following the rules or the formulas on pages 2 and 3. Now let's go up and look at the current assets and current liabilities. Okay. So accounts receivable, which section does that go in? Well, it's related to customers, so it's going to be in section 1. Inventory is related to suppliers, so it's going to be in number 3. Sorry, my dog was doing something. Prepaid expenses are going to be in number 3 as well. And then we have a bunch of investing activities. So now we are at accounts payable. So payable goes in cash payments to suppliers, which is number 3. Income taxes payable goes in our last section, which is section 6. And salaries and wages payable goes with our employees, so that's in section 4. So we've got all our pieces identified. Looked at the key additional information. So we know dividends goes in financing. And we're ready to put the statement together. So on the next page, page 7, and just keep that handy. I'm going to do operating on this one page so that we can figure it out. And then we'll do the rest on the second page. So this is example 1. And it's statement of cash flows, direct method. For Eastern Windows products. And this is showing how cash has changed over time. So it is for the year ending. And in this case, it's December 31st. And it's 2017. Okay, so we're going to start with operating activity. And I suggest when you're doing these questions, kind of set out your 6 areas and then kind of leave spaces and fill them in. So we know our first one is cash receipts from customers. Number 2 is cash from other revenues. Number 3 is cash to suppliers. Now, cash to suppliers is always going to be the biggest one, so leave the most space for that one. Number 4, cash to employees. Number 5, cash paid for interest and dividends, and the dividends have to be on the income statement. And number 6, cash paid for income tax. So this is our operating activities section. So again, because most of the formulas start with the income statement, I'd start with the income statement little points first. So looking at sales revenue is $592, and we are going to add it to section 1. So sales, $592,000. And then make sure you check it off so that you know you've taken care of it. Cost of goods sold goes in section 3. So cost of goods sold is $355,000. And again, check it off that you've done it. Salary and wages expense goes in section 4. And that is $55,000. And check it off. Interest expense is $16,200. And check it off. And other operating expenses goes in section 3. So it is other operating expenses, which are $51,000. And check it off. Now, the very last one that you don't want to overlook is our income tax expense, and that goes in section 6. So income tax expense, which, just so you remember, is CIT, because FIT wouldn't go here. We'd be ignoring FIT because it's non-cash, and that's $39,900. So, notice here we did not include depreciation. If it would have been included here, we would have subtracted it. Okay? So if it were included in other expenses, subtract it. Okay, so we've checked off everything on our little income statement that goes in operations. Now let's look at the balance sheet. So on the balance sheet, the first thing is we have a decrease in AR, and it's $10,000. So if AR went down, that means not only did we have cash from sales, we got extra AR paid on top of that. So that actually increases our cash. Got it. Or you look at the rules on page 2 and just follow them. So think it out or use the rules. It's up to you. Check off the AR. Then the next thing is inventory. So inventory, we said, goes here. And inventory went up. 9,000. So, if inventory went up by 9,000, not only did we buy or spend money on cost of goods sold, but we also stocked up on extra inventory. So that increases our costs going out, or the money going out. And again, look at the rules or reason it through. It's totally up to you. Then we have prepaid expenses. Prepaid expenses went down by 1,500. So that means some expenses that we paid in advance last year, we expensed them this year. So that means cash didn't go out. We just had an expense. We would have debited an expense, credited prepaid. So that wasn't actually cash going out, so we have to subtract it. And check it off so that you know you've hit everything. Okay, now we're down to the current liabilities. Accounts payable. Accounts payable, we said it goes in section 3, and so I'm just going to continue it down here. So accounts payable went up by 10,900. So remember, we're converting these two income statement items to cash. So if accounts payable went up, that means we didn't pay all of this in cash. We put some on account. So we will have to subtract it. And check it off. Then there's income taxes payable, which goes in section 6. So income taxes payable went up by 3,000. So income tax payable went up by 3,000. So did we pay all of this with cash? Well, no, we put some on account, so we're going to subtract it. And again, check it off. The last one on here is salaries and wages payable. Really should have drawn lines across. So there's a $700 decrease, and it's in section 4. So we have salary and wages payable, and they went down by 700. So remember, we're converting the purple numbers from the income statement to cash. So if we decreased a payable, that means we paid off extra payables in addition to this. So we're going to add it. And again, you guys can just memorize well, you don't have to memorize them, but kind of learn them from the rules, or you can reason it through. Now, I think that's all. I'm just going to count and make sure I didn't miss any, because that would just be a little disaster for us. 2, 3, 4, 5. 1, 2, 3, 4, 5. Yes. 2, 1, 2. Okay. So we've hit everything off the income statement and the current assets and the current liabilities. So now we total them up. So this equals 602,000, and it's receipts of cash, so it's going to be positive. Now, there was no other revenue, so this whole thing is 0. You can put it in as 0 if you want, doesn't really matter. Okay, so moving down here, cash to suppliers. We add and subtract our way through, and we get it to equal 402,600. Now, this is cash going out, so it's negative because it's cash going out. Okay, then we just do the same thing with the last three categories.